Welcome to Moneyline. I'm Matt McCall. Thanks for joining me as we wrap up this week. You know, Halloween's tomorrow. It's been a hell of a scary week. Potentially could be the worst week since March for stocks. But it's three things that are leading it. The lack of stimulus, COVID cases rising, the election around the corner. All will be solved. Don't worry. We're going to talk about that and more, what you should be doing with your stocks right now. And naming a lot of stocks. And, of course, taking your questions before we head into the weekend. All coming up on Moneyline.
The buck starts here. Moneyline with Matt McCall.
All right, folks, once again, this is Matt McCall. Thanks for joining me here in Moneyline. It is Friday, October 30th. Tomorrow's Halloween, but it's weird. You know, I've never been a Halloween-type guy. Even though I will say in New York City, I was known for my Halloween parties. We had bashes. I mean, I can't name the names of the people that were there, but you'd recognize them, and I don't even know why they came. Probably free booze. I have no idea. Great DJ, but man, they were some wild days. And now I'm old, so I'm boring, so I don't even dress up anymore. Plus, what are you going to do? You know, I might buy a big bag of Kit Kats and eat them tonight and tomorrow. I think that sounds about fun. But it's a little scary out there right now. It's about 20 minutes to noon here in the East Coast on Friday. We have the NASDAQ down about 287 points. That's about 2.5%. This would be the lowest close here since September. So about a month low here. We have the Dow down about 400 points, percentage-wise, not as bad. We have the S&P down about 55 points right now, 1.7%. So the tech stocks are taking the brunt of it, and we'll talk about why here in a moment. We're also going to talk about the three things I mentioned that are leading the market down, in my opinion, right now, what you should be doing. I'm going to talk about a sector that I think is setting up for a big rally that's pulled back. We're going to talk about batteries. We're going to talk about Bitcoin, altcoins. We're going to talk about cannabis stocks. We're going to talk about electric vehicle stocks, McDonald's, the McRib is back, home builders. I mean, we have so much on the docket here. We need to get right back into it. So let's just get to where we are here this week. As I mentioned, we are pulling back. We had third quarter GDP numbers come out. And I talked about those the other day. You know, you look quarter over quarter, third quarter GDP was up 33.1%. The last quarter was down 31.4%. So the best ever this quarter, worst ever last quarter. And what I find fascinating, though, if you look at the headline number, it shows that the overall growth, if you take the total GDP number from where it was at the end of 2019 and where GDP for the country is now for the third quarter, it's only 3.5% lower than we began the year. And to me, that I didn't know if it was even correct when I first read it, so I actually pulled up the charts and looked at it. It is correct. And it's amazing to me when you think about that, about all the stuff that we've gone through with probably the most contentious, uncertain election in modern times, on top of the first pandemic that's really affected the nation as a whole in a century. Man, but we're only down 3.5% GDP from where we began the year. It almost doesn't calculate to me. It's things, there's still people out of work. Things are still bad. Don't get me wrong. Things need to get better, and they will. But we have to look at things in perspective. You know, I may have mentioned this earlier this week, but when I turn on the news and I hear that the GDP is up 33% quarter over quarter, highest number ever, better than expectations of 32%, and there's this major but. That takes about 8 seconds to say. Then there's a but. And they spend next 8 minutes telling you how it should have been 65%, should have been better. I mean, come on, folks. Like we have to stop listening to the damn media. And I hate to rant on this all the time, but I don't watch the news much anymore, but I have the last week or so just to get views on what the hell's going on heading into the election. And it's embarrassing. I mean, that I used to be in the news. And man, people ask why I don't go on anymore. It's because I've burned a lot of bridges by telling the truth. But also, it's why go on and play the game? Because if I go on, I'm going to tell the truth, and they're not going to like it. I'll never be invited back. So, and a lot of those people are my friends. I don't want to piss them off or get them in trouble. So it's not as bad as they want you to make it sound. And then there's earnings, third quarter earnings. If you look at the numbers that are coming out, 60% of S&P 500 companies, 60% have reported earnings for the third quarter so far. 85% have beat the analyst expectation, so better than expected. On average, by nearly 20%. However, you're not seeing stocks trade higher on this. We have a couple stocks that are in a portfolio that I looked at today that it's like unbelievable. The numbers were fantastic. They gapped higher, and now they're barely up. One of them, for instance, rallied to a new all-time high. At one point today, it was up as high as 10%. Now we're up 0.5%. In a normal trading, this stock should be well into a new all-time high, well up 10%, if not more. But when we're in this type of market where people are fear is just raging, companies won't rally on the good news. But eventually, stocks trade back to where they should be trading. In the short term, stocks can be so irrational and so inefficient. And I think stocks are always inefficient, honestly. But at some point, stocks will trade back to where they should based on the fundamentals. I love the charts, but over time, long term, it matters about fundamentals. It matters about how you're growing revenue, how you're growing profits, the growth potential going forward. It ends up, we revert back to the mean eventually. So a lot of these companies that have reported amazing, strong numbers, but aren't rallying on it. And even some are falling on the news. Holy smokes are those opportunities. And I've been going through them. I may have a couple I'll throw at you here before we end up. But keep that in mind. Again, get through the smoke and the haze that the media is putting out there and look at what's really going on. And that's what we're seeing. I've had a couple calls today with clients of Penn Financial Group, potential clients of Penn Financial Group. It's been a busy week. A lot of people are wanting their handheld, and that's why I'm here. That's what my clients pay me for, honestly. But I'll tell you this. I'll tell you exactly what I'm telling them, and I'm telling myself and friends and family who ask this. In general, of course, we can't give personalized advice on this, but I'm telling you in general, my view on the market right now and investing is, we did quite a fair share of buying for myself, for Penn Financial Group clients, and for our subscribers this week. We bought for all three tranches, and keep in mind those three are always different tranches. Those stocks don't cross over. We're buying for all three. And some are up, actually, believe it or not. One of the stocks bought yesterday is actually up today. Some are down. But we're not buying for a day or two, so I don't care. We're looking long term. And I always say when we buy in a pullback, I don't know if that day's the absolute bottom of that actual pullback, but it doesn't matter. I'm looking for long term. I see a company, a stock that is now on a discount, 15% off. It may go to 20% off, 25% off before it goes back up. I don't know. But I have a pretty good darn conviction it goes back up. And I know that if there's a sale in front of me, I like sales. My grandmother, my old Irish grandmother, God rest her soul, she was the cheapest person I've ever met. Lovely. Actually, she wasn't very friendly, but I loved her. She was the cheapest person I ever met. We're growing boys, all these boys in the family. My cousins playing football, playing sports every day. And we had a piece of meatloaf this big. We had to always go sneak seconds, but it was tough. She really rationed the food there. So I guess why all the McCalls, and there's none of us are overweight, because we never had enough food to eat. So buy on sales, it's okay. Buying and sales are good. I love a good sale in anything I do. I love a good deal. I just bought new golf clubs, got them on sale. Don't pay full price for anything. So that's what I'm telling you to do. Buying weakness. That being said, it's now Friday afternoon. You'll be watching this Friday after close. That means we basically have one full trading day before the election, two until we start seeing some results, hopefully. I will probably not do anything on Monday and Tuesday, regardless of what the market does. I'll probably do nothing. Maybe not even Wednesday. I'll probably wait a couple days to see what happens, what the reaction's like, because there's going to be overreaction one way or the other no matter what happens, and I'll probably wait. I am fairly certain stocks go much higher by the end of the year and into next year, because if you look, even Nomura, which is a huge Japanese bank, they came out and they said if there's a blue wave sweep, if the Dems take everything, they think the likely result, this is their quotes, the largest increase in fiscal spending. And I told you this already. If you saw Biden on 60 Minutes on Sunday, he said he's going to spend. There's no hiding it. He's spending. They believe that it's going to be a whopping 4.3 trillion. And that's almost immediately. I believe that's in the first 6 months, because you're going to see 2.2 trillion come in for stimulus relief, give or take, give or take 100 million. And then he said this already, 2.1 trillion for clean energy / infrastructure. You add those two together, simple math, it's $4.3 trillion. Over the next 4 years, if Biden wins, I think we get close to 10 trillion, because I think he's going to stimulate the hell out of this economy. Do we pay the piper eventually? Sure. But the thing is, right now, there is no other currency out there that can take over the US dollar. The Chinese are not ready. There's no way. The euro, absolutely not. So where? I think the best option, or the best chance in the next decade is a digital currency, and Bitcoin's number one. So that's number one, why I own Bitcoin, why I suggest everybody owns Bitcoin. And number two, why if the dollar falls, it's great for assets such as stocks. Because if you have your money in cash, it's going to dwindle in value every day you wake up. And if President Trump gets reelected, he's going to spend too. We know damn well stimulus package is coming through of his liking. And then he's going to do an infrastructure bill, which we need infrastructure. I mean, look at the bridges and roads around here. I mean, Baltimore is it's like driving through a landmine trying to get here in my scooter. It's the most dangerous thing. It's crazy. It's like going through a gauntlet getting to work every day. And then, of course, you have the worst drivers in the world in the city. I've never seen anything like it. It is truly like going through a gauntlet. But it wakes me up by the time I get here. That and my Dunkin' Donuts. So hold off next week. Wait for direction. If you're a subscriber, which you should be, we will give you direction. Trust me, we'll be all over this. And our investment opportunities newsletter, which is as little as $99 for the year. You get access to all of our portfolios for $99, folks. Go to investorplace.com/moneywire. Everything's on there. Our free articles are on there. Investorplace.com/moneywire. Get access there to buy it. And I'll put the link in here because somebody else asked about a link. So I'll do that. And we'll typically our next issue would go out next Wednesday or Thursday-ish. I'm actually going to wait to take the weekend because I'm going to wait for the election to be over. And I'm going to digest it through the rest of the week, digest over the weekend, and write the entire issue, all 20 pages for you, and get it out to you on Monday. Because I think to do my due diligence to make sure we know what's going on, and I'm always looking out for the best of you, we're going to hold off, and I think you're going to be happy with it. That being said, I have my team right now working on infrastructure plays. So depending on who wins, we have certain ways we're going to go with infrastructure, and we have an entire portfolio ready to go, and we'll probably start introducing that not next week, the week after the election. So be ready for that if you're an investment opportunity subscriber. We do have some post-election stocks coming your way. So we are here for you when it comes to that. All right, so three things going on here, as I mentioned. We have, obviously, lack of stimulus, which I think we at some point, the election I just discussed. And the third thing is COVID's cases spiking. And, I'm not a doctor, so I'm not going to get into what I think. I mean, I'll give you my view, but you're seeing the cases spike, but you're also seeing the deaths not be proportioned to it. They're staying much lower. I don't know if I believe what I read about hospitalizations. I talk to people here that come into the fitness studio that are nurses, and they said they have more than enough beds, and they're more than prepared for if there's a spike of hospitalizations in the Baltimore region. So I don't know. I take it from people I know and trust versus what one person picks out of the media. I will say that this is kind of my view on this is you look at sports. Every major sport has had people get it. We have seen many people get it in college sports. Nick Saban, the coach of Alabama, in his 70s, I believe, early 70s, if not late 60s, all get it. If there was one person in that college and professional sports world that got very sick, darn well the media would be all over it, and they haven't been. So it just proves these healthier, younger people, Saban, like I said, 60s, 70s, are getting it, and they're fine. I'm not putting it down because people have died. We all know friends and family that have gotten very sick from it. And I'm not putting down how serious this is and how quickly it can spread. But what I'm saying is I think we have to focus on the fact that more people are getting it, yes, but it's not as severe as it was. And, I do my research, but again, I'm not a doctor, so don't get pissed off at me if you say, I'm not taking this seriously. I'm just giving you my view from it. And, I'm going to dinner this evening. I'll be out at dinner with a few people this evening. And I'll wear my mask when I walk in. I'll wear my mask if I go to the restroom. And I'll wear my mask when I need to do it. But when I sit down for dinner, I'm going to take it off. So I don't know. But we all have a choice to do what we want. We could stay inside if we want. And if you are susceptible, you probably should stay inside. But my point is, they're spiking, but you're not seeing. I don't think it leads to a shutdown, put it that way. I don't think it leads to a shutdown. All right, so let's get into the fun stuff, the stocks. Let me get all that negative shit out of the way. One sector that looks good to me, I will tell you this. It's biotech. And they're down today. The NASDAQ Biotech ETF, which tracks the NASDAQ Biotech sector, symbol is IBB. It's now down. If it closes here, it'd be about a 5-week low. It's down about 2.7% today. It is above the pullback, the low that we had in September, which is nice. So it didn't break that support. When it pulled back at that time, it pulled back to the 200-day moving average. This is an important long-term moving average. We're sitting kind of just above it now, a couple points above it here. It's very oversold with the RSI down below 30. I think this is a great buying opportunity because regardless of who wins, once we get the elections out of the way, we see stimulus come, biotech's going to go higher. Over the next couple years, it's just one of the great opportunities out there right now. So I think we can't ignore this. And I saw a great stat today that the amount of money that's coming into biotechs too, and that's a good sign that big money's coming in. IPOs so far this year, we've had 73. That's the most we've seen in many, many years. The total proceeds at $13.3 billion. And last year was 5.6. 2 years ago, 8.4, then 4.1, 1.9. I mean, you add all those up, you add the last 4 years up, we may hit that by the end of the year. So you're just seeing big money coming in because people see the opportunity when it comes to biotechs. So to me, I'm really liking this. And part of this whole melt up, this money coming in, will be going into biotechs, in my opinion. So I took a look at a couple biotechs here that look good, and I wrote them down here somewhere, and now I can't find them. Well, of course, I added them, and I printed this before that. But I remember what they were. You're in luck. One is a biotech that we have in a portfolio, and I've shared in videos in the past. I'm just going to reiterate it's a great buy, and that's BioXcel Therapeutics. And that's symbol BTAI. And I'm not ignoring the camera here. I'm just going over to my computer where I have it pulled up. What I love about BioXcel is they should really start producing some serious revenue in the next couple of years. They're going after agitation related to a bunch of different mental diseases, and they're really the only ones going after it, and it's big business. And the expectation is for them to really become profitable, just slightly profitable in 2023. It's only 3 years from now. By 2024, making about $6 a share. 2025, we're looking at $11 a share. And that's a stock that's trading at 45.5 right now. So you can easily, if it meets these numbers, folks, you're looking at a company, in my opinion, that would be valued in 4 years from now, pricing in 2025, but you price in a year before. 4 years from now, should be trading at least 30 times earnings, at least. 30 times 11 is pretty easy math, well over $330 a share from 45. So I think the upside here is enormous. I think this is a 10-bagger in the next 5-6 years. And the downside of risk, I don't think is that big because it's got a lot of stuff. The pipeline is juiced. So I'm loving it right here. So this is one you definitely want to keep an eye on and use the advantage of buying while it's kind of just sitting there being quiet. There's always quiet times in biotech where there's a lot of news, not a lot of news coming out. So that's one that I like. Another one here to take a look at is Acceleron. And the symbol is XLRN. Stock's about 103.50 right now. It's pulled back from about 125 last week. So it's down about 18%, 17% or so. Very oversold. A lot of support between 95 and 105 where it's sitting right now. This stock has already moved a lot in the last couple of years, but I think this pullback is a great opportunity. And what you're seeing on these charts for a lot of these BTAI, Acceleron, and the overall market itself is what you're seeing is you're seeing pullbacks on light volume, rallies on big volume. I talked about this earlier this week, how on Wednesday, how what this means is that there's not sellers taking over. It's just the buyers really taking a step back and waiting. And that makes sense considering the three factors I've already mentioned for why I think the market's pulling back. So that's one to keep an eye on. And, sales in 2018, Acceleron had sales of 13 million. Last year, 74, huge growth. By next 4 years, looking for over $500 million in sales, looking to make about $3 a share in the next 4 years. Again, big upside. They recently got a drug that they partnered with that got approved, and so starting to bring in some income or some revenue. You'll start to see more revenue because they have another drug going to phase 3 later this year, hopefully results in the next year or so. Again, great pipeline. That's what you're looking for. So those are two to keep an eye on. Biotech in general, please keep an eye on biotech. Do not ignore what's going on. Tech's getting hit. I talked about that already. That's leading the market down. We now have the NASDAQ down 2.9%. I mean, people are just, for some reason, hammering the big tech stocks. You look at Apple's down 5.5%. And the numbers weren't that bad. Amazon down 5%. I thought the numbers were great on Amazon. Twitter down 20%. I mean, it's unbelievable what you're seeing. Google, I thought the numbers were fantastic. The stock's actually up 3.8%. But on a normal day, again, Google would be up 7-8% probably. It gapped up, and it's now near the loaded session. It's amazing to me how you see some of these numbers, and it's just, people sell off because of some crazy fear that somebody instills in them. Amazon, for example, let's take them. We had this shift going to online e-commerce already. Then we had COVID, push people there more. I order so much stuff on Amazon, like the most random stuff. And you get everything on there now. But who cares about me? Let's look at the numbers. Last year, they did sales of $280 billion. By 2024, looking for $675 billion. For a company that's worth about $1.5 trillion, that's insane growth. That's 5 years, more than doubling. That is insane growth. Earnings per share. Last year, $23 a share, $23 and a penny to be exact. Again, in the next 4 years, $120 a share. That's 5 times, folks. Growing bottom line 5x. Let's give it a 50 multiple at 2024 numbers. A 50 multiple. And people say, that's so expensive. Look at how it's growing. A 50 multiple is not bad. By 50 multiple, I mean trading at a P of 50. That puts shares at $6,000 a share. Right now, it's at $3,058. So even though Amazon's $1.5 trillion, it could double. I mean, granted, if that happens, I love some of these smaller companies. I think they do much better. But my goodness, you can't overlook this. So if people say it's over, these valuations are so ridiculous, they're not. This is not 2000. And anybody who says that to you, please just give them the hand and say, get the hell out of here. Because they're not going to help you ever. It's just not true. So again, I like smaller stocks, but these big stocks, some of them look pretty damn good on a pullback, I'll tell you. Some look pretty damn good. All right, so now it's time for your questions. I went through Twitter, as I always do, and asked some questions early this morning on my way to my 6 a.m. Pilates class. Yes, I was at 6 a.m. Pilates. I was laying in bed from 4:30 to 5:30 thinking of every reason I shouldn't go. Every single reason I shouldn't go. You know how many I came up with? About 60, but I still went because I hate not doing things I say I'm going to do. And I felt so much better when I was done. Got my stretch on, worked my abs. I felt so much better. So here's some questions. There's so many questions about one particular topic that I'm going to cover that topic. And it's really related to electric vehicles and batteries. So let's touch that. Everybody knows I love batteries. Everybody knows I love solid-state batteries. Everybody who's a subscriber knows the very small company that we have in there that's up 400%, and I still think it's got much more to go. It's trading for less than $1.25. It is a small company. It was even smaller when we first put it in the newsletter. And it's a leader in solid-state batteries that nobody knows about. And it's a good thing because once people know about it, it's going to skyrocket more than it already has. So that's my play on solid-state batteries. But somebody asked about QuantumScape, which is going public via a SPAC, which everybody knows what SPACs are. If not, I have a video there all about SPACs. It's Kensington Capital Acquisition Corp, KCAC is the symbol now, but it will be going merging with a company called QuantumScape. And they have investments in deals with Volkswagen. They also have Bill Gates invested in it. The Qatar Investment Authority, that's their big sovereign hedge fund over in Qatar, which has tons of money. They've invested in it. They believe that their battery can reach 80% capacity in 15 minutes of charging. And that's what you need for electric vehicles, quick charge, and really for anything going forward, because everything's going to be run on batteries. We need to move on from lithium ion. They're too dangerous. They're too expensive. They're just a mess. So they're good for now, but we need to move on from that. And solid state is the way to go. Not dangerous, and eventually they'll be cheaper and much better technology, charge faster, and the charger will hold longer, meaning that you could charge it more times without replacing the battery. Basically, it's your forever battery. So that's one to keep an eye on. On the news, all SPACs, well, not all SPACs, most SPACs trade at $10 when they come out until they announce what they're going to be buying. This gapped up after that 2 days later from $10 up to nearly 26. It's back down now to 1160. All these SPACs have gotten that, especially ones that are EV related, have gotten hit lately, and they've all pulled back. I think they're great buying opportunities. QuantumScape, the only fear that I have with it is it says we have this proprietary technology we're not going to share with you. That always scares me a little. But again, I think either way it will do well, but that scares me a little bit. So I have no exposure to it right now. Speaking of that, there's also another SPAC that is going to be emerging as well. And this one ran from $10 up to nearly 18. It's now back down to 13. This is Switchback Energy Acquisition Corp, symbol SBE, but they'll be merging with ChargePoint, which calls themselves the largest network of EV, electric vehicle charging stations in the country, about 115,000. But by 2025, which is only 5 years away, folks, 4.5 if you count the beginning of it, that we'd have a need for 7 million. They have 115,000, and they're the leaders. Just think about more charging stations will be everywhere around the country. And if Biden wins, that's one thing he's talked about a lot. Company said that their revenue will grow annually, compound annual growth rate. They call it the CAGR, compound annual growth rate of 60% from 2021 to 2026. That is insane revenue growth. So again, one you want to keep on. EV sales last year, only 2% of all sales were EVs. That's obviously going to go up much bigger. Of all the vehicles on the road right now, the autos, EVs only make about 1%. Again, it's going to grow exponentially. So this could be a great buy. Again, I have no exposure to it, but it could be a great buy as well, because charging stations are going to be here. Just the question is, will they continue to be the leader, or will somebody else jump in? Somebody asked about another SPAC, and this is one that's going to be merged with Fisker. Symbol's now FSR. And as I mentioned, $10, right, is usually where SPACs are. This ran up to over $21 on the announcement, back down to 12 in August, back to 17, 18 in September. Now it's down below $10, $9.87. I've been saying since day one, when they announced that this merger is going through a Fisker, I say, get the hell out of it or don't buy it. Fisker tried to go public a couple years ago. I remember getting a phone call. Man, it's probably 10 years ago. I lose track of time. Colleague of mine, she wanted me to meet Fisker. I think his name's Henrik Fisker. He had this car he's creating. It was going to be better than Tesla, all this kind of stuff, and to invest in it privately. I was like, man, that doesn't look good. They got tons of money from the government and went bankrupt. So this is kind of their second act, trying to go at it. There's something about it. I just think maybe it's bad taste in my mouth because of that. I didn't invest in it or lose any money, but there's just something that stinks to me about this. I would stay far away from it. I don't like it at all. And maybe it's just a gut feeling. Sometimes that's all it takes for me is a gut feeling. Then there is FVAC, which Fortress Value Acquisition Corp, FVAC. This is one that, again, $10, ran to 16, back down to 11.30 right now. Still holding above that 10. This is merging with MP, which is short for Mountain Pass, which is the only real rare earth minerals miner in the United States. It's mines out west. Trump talked about giving a lot of money to getting rare earth minerals set up here because we rely on China right now for that. Heavily. China, Mongolia, it's where a lot of them are. So I think this is I own this for some Penn Financial Group clients, just for full disclosure. I love this. I think this is a nice way to play the batteries of the future, because the batteries, EVs of the future will need rare earths, minerals, and for a lot of other technology, weapons, you name it. I mean, it's crucial to the future of technology. So that is one to keep an eye on as well. But they're all related. They're all kind of SPACs. So I wanted to just throw those all in the one basket. And people asked about all of them. But while we're on the topic of EVs, I still love Tesla, honestly. I think Tesla's still a great stock. It's down 5% today at 390-ish. I mean, I still think, I said this is a $4 trillion company. I think it's a 10Xer from here. And I'm not saying anytime soon, but I think in 5-7 years it is, 10 years at the latest. But still, if you could 10X your money next 10 years in a big company, I think this is one to go. I really do think I love Tesla here still. And I love how people still keep trying to short it and say it's going to zero. Man, what a bunch of schlubs, as they say. All right, Bitcoin, altcoin, people are talking about that as well. You all know my views on Bitcoin and altcoins. Altcoins have taken a big hit the second half of this week. And I think a lot of it has to do with just the selling we're seeing in the market. As I mentioned, market's selling off. In the last 24 hours, though, Bitcoin's up. It's at 13,600 right now, not far from a 1-year high, basically two and a half year high, sorry. And at the same time, almost every altcoin on my list is down, while Bitcoin is up. So yeah, the Bitcoins the altcoins are getting hit. People sell the more aggressive stuff when you have a sell-off for some odd reason. This is an opportunity to buy. If you're looking to buy Bitcoin, I think between now and end of next week, so next 7 days, you had the election right in the middle of that we're going to have some type of sell-off, no matter who wins, either right before the election, right after the election. Again, a gut feeling. It could be in the middle of the night, could last an hour, but I think we have some type of spike down. If you're looking to buy or add more into altcoins or Bitcoin, I think you use that, because I think we're going to see one. Again, it's gut feeling, folks, not a recommendation. It's my gut feeling. All right, we got a couple more questions we're going to go through here, and then I'm getting tired for some reason. This is a decaf. I already had one coffee, so I'm drinking a decaf. And I got a boatload to do yet today. And I almost just spilled my coffee over 3 computers. They would have killed me. Somebody asked about this company. This is one that we had in the past and sold a while ago. GW Pharmaceuticals is like kind of the first cannabis company. They do have a drug that is approved, Epidiolex, and it's used for seizures in children. It's a cannabis-derived medication. Company's based out of UK. It's about a $2.8 billion company. It's come back well off the highs. It was around 140 in July. It's down around just under $90. It's actually up a little bit today. To me, though, I do like I like the opportunity here. Last year, it did about $311 million in sales. I think in the next few years, you're looking at sales $1.5 billion. It should be profitable next year. So to me, down here, if you're doing sales at $1.5 billion in the near future, that's a price of sales based on that of less than 2.0 for a biotech company. I see this expanding. I see more drugs getting approved in the pipeline. Epidiolex getting approved for more indications. Sativa is, or not sativa. I'm blanking on the other drug. I could probably look it up if I wanted to. But there's another drug out there that they have as well that is in phase 3. Man, oh man, I can't think of it. But it doesn't matter. But Epidiolex is the one that's approved, and for Dravet syndrome and other types of seizures. And I see that growing, and I see a great opportunity here with this. So yeah, on this pullback, I like this. And it's a biotech, essentially. So you're getting into the biotech sector as well. So great question. Thanks for that. And just so you know, cannabis stocks in general, I think we're going to see a rally after the election, regardless of who wins. Obviously, if the Dems win, we see a bigger rally. But I think we have some type of a buy the rumor, sell the news, sell off maybe right after the election, and some type of buying opportunity in November, especially U.S. based. So I think that's when you're going to see a great opportunity to buy into cannabis stocks heading into 2021, when we start seeing some decriminalization and legalization actually take place. Another question about Toyota versus Ford. Somebody asked why Toyota stocks price so much higher than Ford. So Toyota stock's up $131 a share. Toyota's $7.70 a share. The price per share is irrelevant. It's the market cap. And Toyota is bigger. Toyota's got about a $183 billion market cap. Ford's about a $31 billion market cap. It's a bigger company. It's a better company. It just does more in sales, much more in sales. Both are cheap price based on price to earnings, price to sales right now. Even growth. Both are very cheap, very, very cheap. I prefer Toyota. If I had to choose one, it's in our portfolio. So I prefer Toyota. They're doing some work on solid state battery, which I love. But I will say this, it doesn't matter what the price per share is. It matters what the market cap is, market valuation. You can find that in Yahoo Finance. You can find it anywhere you look. The market cap is the value of the company. And that is taken by the amount of shares outstanding and multiply it by the price per share. You get the value. That's the value. That's how much that company's worth right now on paper. So whether the stock's $7 a share or $700 a share, it doesn't matter. It's what the company's worth, how many shares outstanding. So it's called market capitalization, market cap, people call it for short. The other thing is somebody asked about ST, which is Sensata. It's a company we've had in portfolio for a long time. It's a sensor company. I love it because the amount of sensors that are going to be out there, Internet of Things, connecting, you need sensors for everything. They have a vehicle, they're in vehicles. And a sister company of ours put out something and put a D rating or something on it and put out a little blurb that they don't like Sensata. And clearly Sensata is not getting contracts. That's just not true. It's not true. And the great thing about our business, though, is a lot of us can be friends, but we don't agree when it comes to this, and that's fine. We'll walk away as friends, but that's what makes a market. If we're all buyers, there's no sellers, the stock goes up every day. But eventually, it goes up too high and it crashes. So you need buyers, you need sellers. That's what makes a market. I disagree a lot with other people, and I think that they're just wrong, to be honest with you. And I've had a few people ask me about this. I just think they're wrong. I'm not always going to agree. Just how it is. The same person also has a D rating on Tesla, and they've been quite wrong with that. So take it for what it's worth. I don't think it's that easy. I think you have to do a little more research instead of just looking at a rating. And then the McRib. I'm not a McRib guy, but I saw that it's back nationwide. McDonald's, people love this. I'm not a ribs guy, and I really don't like fast food, and a McRib just scares the shit out of me. But McDonald's is pulling back from an all-time high. I think the stock looks great here. If you wanted to look for a big cap stock, if we have any type of more COVID shutdown BS, I think this is a great place to look. But the McRib's back for all those people who want to know. Last but not least, home builders. These home builder stocks, man, I was looking for stocks for you. I was looking for stocks that are pulling back from highs, that are oversold, just like biotech, but something outside biotech. You hear me say a lot. Home builders are at the top of the list. They look fantastic. One of the home builders in our portfolio, record numbers this week. The stock was up on it and that was down the last 2 days. Record numbers. I mean, I'm telling you, this is happening just because of what's going on. If you read anything, I'm going to look at another house Sunday. Sunday. I'm going to look at another commercial space tomorrow. My realtors are booked. Everybody was looking at stuff. Mortgage rates, the 15-year mortgage rate, lowest ever. I think it came in. I read this in the middle of the night the other night, 2.82% or something. I think no, it may have even been lower. Oh, I gotta check. But 2.3%, I think. They're at 15-year mortgage rates. Why is it so? Yeah, 2.3%. Why is it so hard to find? Because anytime you put in mortgage rates, all you do is get sold stuff. It's just buy it from me. Buy it from me. Get your mortgage here. I can't even get it. 2.3% though. I'm almost positive. That's like free money. That's like inflation. Unbelievable. If I could borrow $1 billion today, if anybody's out there is a billionaire is watching, for 2.3%, I'll take you up on it. 3.5%, let's call it. I'll even make the VIG higher, 3.5%, because I know I can take that money and make a hell of a lot more off it. Man, oh man, leverage, people, leverage. So 2 stocks that came out to me. One is BMCH, which is a materials company. It looks really nice on a pullback here. BMC stock holdings, pulling back from an all-time high. Nice support around $39.40. It's around $40 right now. Looks great. Everything looks good. RSI buy signal. That's a play, secondary play on housing. And the other one that popped out to me was Trex, TREX, the synthetic wood. This has been a huge winner for investors. You go back to 2008, this stock split adjusted was below $1. It's at $70 right now. There's a 70 bagger for you folks. It was at 80 just 2 weeks ago. Looks great on this pullback as well. And then there's always AZEK, AZEK, which is the recent IPO. It's kind of the competitor of Trex. And I've always told you I like this one a little bit better. This one looks great here around $33, $34 as well. So those are secondary plays if you want to play the housing boom, in my opinion. All right, we covered a lot today. Let's just go over it real quick. Don't forget to comment, like, subscribe. I'm supposed to say it in the beginning, but I always say in the end. Any comments, let me know. Triple whammy. We have lack of stimulus. We have COVID cases rising. We have the election. I mean, you can't ask for worst case scenario for stocks. That's why they're down. They shouldn't be a big surprise to anybody. Buying a weakness. I may wait till after the election doing more buying, but I did enough buying this week. Stimulus will come. That's going to be good for the market. Biotechs look great. Home builders look great on pullbacks. Big tech getting hit. The numbers weren't that bad. I'm telling you, they're actually pulling back to nice valuations at this point. Battery stocks I love. EVs I love. Think about charging stations. Bitcoin, altcoin, buying whatever type of pullback we get in the next week. GW Pharma looks good. Cannabis-related stock. Biotech. ST Sensata. It's a buy. I don't care what anybody else says. And the McRib is back. Not that I care, but it's back. All right, folks. Have a wonderful weekend. It's going to be a little chilly one here. I can't wait. It's great football weather, as I like to say. Go Eagles. Go Birds. Go out there, hug somebody, tell them you love them. Be safe, number one. Enjoy the weekend. Smile, get out there, and just enjoy freaking life. Thank you so much, everybody, for watching, listening, whatever you're doing. If you're in a car, drive safe. I'm Matt McCall, and that's been your Moneyline.
Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.